Hello guys and welcome back to the channel. So in this video we're going to talk about why you shouldn't care about the Fed anymore. So this is going to be an interesting video. I think it will be a bit controversial because I think that the Fed doesn't matter anymore, and who cares if they raise 25 bips or cut 25 bips. By the way, they just ended up raising 25 bits and some people are freaking out and they're saying that they are breaking the economy, and I really don't think that this is the case, and the Fed made the right moves. And you really should look away, and I'm going to tell you at the end of the video what you need to pay attention to instead of the Fed, because the Fed is not that important anymore. So all I ask is, if you like this video, please make sure you hit the subscribe button and like the video, because that helps out the algorithm. So as I'm sure that you have heard, the Fed has raised with 25 basis points, and this is not something that you should care about. And I'm saying this despite people thinking that this will crash the banks because of all the bank failures that have been happening. But I think that these fears have been totally overblown. And the people who have these fears, they didn't really understand what was happening and what the handling was to make sure that these don't happen. So basically, these banks had a very specific liquidity issue, is that they had assets that, because of the rate hikes, were not worth as much as that they should have been worth. And this is no problem because these were bonds, and if the banks can wait out the time, the bonds anyways pay them interest, and then there is no loss. The only trouble that the banks have is if people get a mass panic and then they pull out the money from the banks. This obviously was hitting mainly the regional banks, but all the banks all over the planet work the same way. And if you were to take out all the deposits from JP Morgan, actually if you were to take out 30% of the deposits of JP Morgan, that bank would not survive. So all the banks on the planet have the utmost intention to not have even the slightest bank panic, right? So it makes sense that they backstop this immediately. And they were calming down the people, and they basically, the solution that they came up with is that they made this new lending facility at the Fed where they could loan against the bonds at par value. And I think that this was more of a sign to say that they are backstopping everything to calm everybody down, because again, if the people are not panicking, this is not even needed in the first place. So my point was that they completely handled all the danger that was in the rate hikes. So to think that this would make them stop rate hikes because they want to take care of the banks, it was just a mistaken thought, because the moment they handle this, they can raise rates again into eternity, because they can they have a way to bail out the banks now. Then I'm saying this despite people saying that the Fed is going to break the economy, and this is also simply just not true anymore, because when the Fed was raising from 50, when the Fed funds rate was 50 basis points and they raised it to 1%, that's a doubling of the interest rate, right? But now we're going from 4.5 to 4.75, and that is only a 5.7% increase. So let me tell you, if your company was going to make it with 4.5% interest rate, you're still going to make it with 4.7 interest rate. And if you were struggling because you're in the real estate or the auto segment, you are going to be struggling the same. So I really don't think that this 25% interest rate really mattered. But there's another reason why I don't think that the Fed is so important anymore, or that matters anymore, and that's because inflation seems to be completely taken care of. And this has been done in a way that the banking system has been stabilized, so we don't even have a chance of another 2007-2008 financial crisis happening, because they basically nipped it in the bud. And so we have a much more stable financial system, and the inflation seems to be coming down very, very much. This is a website that gives a better inflation data, a more real-time inflation data than the government data, and is showing that the inflation in the US is at 4.4%. And look at the trend. And if you know how much the oil was last year at this time, natural gas was last year at this time, all the materials, Even we know that rents are coming down, housing prices are coming down. There's just no way that inflation continues to be a problem in the future. So the bottom line is that there is maybe 1 to 2 rate hikes left, and then after this what we have is a relative stability. We have a whole new world where, you know, your house costs a lot more, your auto costs a lot more, but at least you know what you have. You don't have an instability. And I think that the Fed actually did the correct thing by raising the interest rates so fast. I have a real estate business where we are building hundreds of apartments in southern Sweden. And what we have noticed is it was insanely hard to sell people any kind of real estate while the Swedish central bank was raising the interest rates. Now they are communicating that they're coming very close to a stop, and now suddenly people are buying. And I think that it was not necessarily that the prices were going up that was stopping people. It was more like they knew that there is going to come a huge increase and there was nothing that they could count with. So it wasn't like that, okay, I can buy this home and I will pay $2,000 a month and I know that I can pay it. But maybe this $2,000 per month is going to go to $5,000 per month, and I know that I can't pay that, so I don't even want to take the risk. But now we came to the level where, you know, the bank is saying that, okay, it's going to be $3,000 a month, and, you know, maybe $3,150, maybe $2,950, but this is where the rates are going to be for a very, very long time. So now people, because there is stability, because the rates were increased so fast, this is something that I think was needed because of the modern times and, you know, how fast people react to inflation. And this basically makes the buyers come back. Obviously, granted, it's a much less demand, it's a lot longer sales cycles, but there's customers again. In December, I met several real estate agents that were very good real estate agents that had 0 sales. Can you imagine guys that are selling, I don't know, 15, 20 apartments per month, and then all of a sudden they get 0 sales and the phone is not ringing? I mean, it's crazy. So at least now they are making sales again, customers are coming back, and that is because a relative stability is coming back to the economy. And what is even more surprising, guy, is that we might be at the beginning of another bull market. There's not a lot of people talking about this, but think about it. Many stocks seem to have bottomed. I mean, look at Tesla. What is the chance that we're going to get $100 Tesla again? It was the perfect storm when the stock price went down to that price. It was like people thinking Tesla has no demand. People didn't know what the Twitter acquisition is going to be like, and they basically thought Elon was missing in action and was not on post. And on top of it, the Fed was endlessly raising interest rates, and they didn't know what was happening. It was like really the perfect storm, right? Now we know that there is 0 question about Tesla's demand. Now we know that, you know, they are going to be able to keep their production. We know that, you know, this whole setup with Twitter and Tesla, like Tesla didn't collapse. So it's very hard to conceive of any situation where Tesla would go back down to $100. Same with Netflix. It bottomed at around, what was it, like $165. I was very much considering it. I was even doing videos saying how good of a deal that was, and in the end I didn't end up buying it because I liked more of other type of growth companies. But yeah, I would be around 100% up on my investment from that point. And it's very, very unrealistic that we're going to see those prices again. Look at Meta, look at Palantir at, you know, below $6. And if you think like me that it's not real that we are going to see those, we're not likely to go lower, it means that we have hit the bottom, right? And on top of it, any news outlet or anything that you watch or any newspaper that you read, they're telling you equities suck, bonds. You know, you can't invest the money, inflation, Fed, and the sentiment is so negative. And this is how it's supposed to be at the bottom of a bear market, because that is, you know, the darkest moment. And if it's true that we have bottomed out, it was somewhere in November, December, and I don't know if you remember those times. It was like anything you turned on, it was Like even the most bullish of the bullish guys were turning bearish, and I even made a funny video that Jeremy Financial Education stopped buying stocks and he turned bearish, and this means that we're at the bottom, and it was a joke, but it turned out to be kind of correct, at least up till now. And if you think about it, the downside risks are becoming harder and harder to believe, because what would you need for the market to keep going lower? You would need to have the inflation like completely reverse course and go up, and we basically know that that's impossible because of, you know, what oil was last year at the same time, you know, it's not going to happen. Then you have, you know, the war in Ukraine, that it could spill over to Europe, but again, everything is known, you know, so you need to have this like 1 in 1,000, you know, freakish black swan events. I mean, we had bank collapse now, like we're even past that now. So for me, there is very hard to believe, you know, bearish thesis in the current moment, because we have I feel that all the expectations have been, you know, set to the floor, and it's really hard to go below those expectations, right? But at the same time, also there is no clear bullish indicators, so it's all up for grabs. All right, so here is what I'm doing, and because, you know, I don't want to say this is what you should be doing, because I don't want to give you financial advice, but this is where I'm putting my attention, because the Fed, I tell you, doesn't matter anymore. Because it seemed like they became the new COVID. You remember how in 2020 everybody was talking about, you know, like COVID, mask, lockdown, COVID economy. Now it's like inflation Fed, inflation Fed, inflation Fed. And it's just the wrong place to put your attention. Instead, what I'm doing is researching great companies that I want to own for the future, like PLTR, like ENPH, like Tesla, and I'm working on, you know, getting in money so that I can invest in the stock market. And this is what I'm following minute to minute, not the freaking Fed, because it doesn't matter anymore. And we might have, so in my mind, there's two likely scenarios, and I will go into which one is the most likely. I think that we might have started the next bull market, but I don't think that we're going to go to the moon. I think what is more likely is that we're going to be trading in a range for an extended amount of time, maybe 1 to 2 years, which is a perfect time for a long-term investor to accumulate stocks that you like at prices that you like. For example, on Patreon, by the way, you can check out the Patreon to get exclusive video content, access to me and my valuation models for Palantir, Tesla, ENPH, and other stock, and it's $5 a month. But it's not what I was going to say. So what I was going to say is I made videos that I think, for me, Palantir is overvalued over $8, right? So what I would do is I would just wait, and when the stock dips below 8, I would be adding to my portfolio. I said the same on ENPH. It was around $180, and it's the same. I would patiently wait, have my price target, not have any emotions, and if the stock goes down, add to the position, full knowing that maybe the stocks will not really go anywhere for, you know, an extended period of time, but I'm completely okay with that. And I think that this is a very, very big opportunity that only comes, you know, once in I don't know, in a decade. And I really want you to take full advantage of it. So the Fed doesn't matter anymore. Focus your attention in the correct place. Just do the right thing, think long term, and make lots of money. Thank you so much for watching this video. Please make sure that you're subscribed, and I'll see you in the next one. Ciao, ciao.